So hi everyone, we can see that for every time the market forms this candlestick pattern right here, this blue candle, we get us a change in trend. Okay, we can see that even right here it was formed, though it is red and the color doesn't matter, we got a change in trend. So what does this come to signify? This candlestick pattern is called the hanging man, and every time it appears on an uptrend, we expect a big reversal or a change in trend. So for example, here we are expecting this change in trend, okay? So let us study more about the hanging man in this video. So the hanging man is this candle right here. You can see that it has a long wick on long lower wick, and then it has a small body, and it appears in an uptrend. Okay, so this is everything you need to know about the hanging man. So a hanging man is identical to a hammer, but the best difference is that the hanging man occurs in an uptrend while hammers occur in a downtrend. So what we are saying that this candle right here is identical. That means it is similar to a hammer, but the basic difference is that for this hanging man occurs in an uptrend, okay, and then the hammers occur in downtrend. So in this case, the wick extends down contrary to the uptrend and suggests an emergence of a bearish demand, which is capable to push the price down. And it is often the first sign that the uptrend is exhausting and bears are stepping in to create a reversal. So what happens is that as the price is moving high and high and high, the market forms a big bearish candle. But before this trading session closes to form this bearish candle, the bulls tend to push the price high once again, and they end up forming a candle like this, and this candle is called the hanging man. So this candle signifies that because of this rapid price movement which occurred before the trading session to push the price down, which was followed by a subsequent move to by the bulls upwards, it shows that there is a pressure which is coming from bears to push the price down. So there we expect that the uptrend is going to exhaust, and we expect a big reversal, or sometimes we expect an entire change in trend. Okay, so for a reversal signal to be confirmed, the consequent bearish bar should reach the neckline established by the open of the bullish bar on the other side of the hanging man. So what we are saying is that when we, for example, we look here, we are having an uptrend, okay, and then we form this hanging man. So for us to confirm that it is a reversal signal, what happens is that this candle which comes next, the bearish candle, it should be able to reach this line here, the previous swing low of this candle, which is the hanging man. And then our entry point is at the slightly lower than this consequent candle which comes in to reach the neckline right here, or the swing low, and then we can be able to catch the wave down. Okay, so on this chart we are going to be spotting some hanging man candlestick pattern. So for example, when you look here, this would be a hammer only if it was in a downtrend, if this was a downtrend. So but at this moment, this is a shooting star, and we covered this one in the previous videos. But right now we are looking for this candlestick pattern called the hanging man. Number one, it is confirmed when we are on an uptrend, and then we form this candlestick which has a long lower wick and its body is small. So sometimes the body has a protruding wick which is tiny also, and then we only confirm the signal when the consequent candle, the candle which comes next after this hanging man, it closes either below or at least at exactly this swing low whereby this candle this candle moved, the swing low where it last hit. Okay, so the entry point, if you're going to go short, if you're going to sell, is where is below the swing low of this big bearish candle, and then a stop loss, and then followed by wave down to catch the profits. So we can also see here that we have this hanging man, okay, and then it was preceded by this uptrend. So this is a confirmed hanging man. So what we are waiting for is to get this big bearish candle right here, and this big bearish candle should reach at least or close below the swing low of this hanging man, and then we can confirm that it is a short signal, and the entry point is at few pips away from the close of this big bearish candle, and then we are waiting to get the wave up, the stop loss. So you can see that here we got a break, we got into the money, and then the price came back, but it was followed by this swing low. So we are expecting a pattern like this. Okay, so that is the hanging man, and in general a hanging man is similar to a hammer, okay, and a hammer occurs in a downtrend, okay. For example, right here we have a downtrend, and then we have this candle here which is called the hammer, and then for a hanging man to occur, it's supposed to occur in an uptrend, and then it's supposed to be followed by a big bearish candle, which is an entry candle, and then the color doesn't matter. You can see that right here it is red, but at this level here the color is blue, so it can either be a bullish or a bearish candle in color, but it doesn't matter. So we are just waiting for this big bearish movement, and then we can make an entry point, and then we catch the wave down. So thank you so much for watching this video. Subscribe to the channel for more videos like this. I'll see you in the next video. My name is Jordan.